Hello everybody, this is Matador again from freetradingvideos.com. It's 12:10 p.m. Eastern Standard Time, Monday, June 28th, and we're looking at a nice gap up from this morning. A little 60-minute chart here, the S&P 500 ETF. Just to zoom in a little bit, let's do that before we get started here. Just a gap up right to the 108.40 mark, which was the declining 200 that we talked about. We've held that as resistance all day long, even after a perfect gap fill. A nice sell-off down to a good level of support right through here at 107.40. Nice little swing low. Next logical spot down here at 106.80. Round number of 107 also. So nice test. We have a very, very nice retracement even past this logical resistance on the way back up. Disregarding that almost, taking that out, hitting our head on the declining 200 again, which you'll see matches nicely on a higher time frame with another resistance area, and basically the highs of the day. Now we're looking to hold the 108 mark again, which we had been looking to hold before, kind of fighting that, looking for a higher swing low now. On a 60-minute chart, you can see that this 50 MA that we mentioned is also being a bit of a nuisance to our bullish side of things. So not all that rare to see that, but we are sort of churning higher here. So let's see if we're getting any broad market internal confirmation. This morning, as the stocks are opening, gets a little jitters out, but very, very nicely bullish. But then right toward the middle of the day, we saw a nice rise, even past the 0.8 mark, held that very nicely and started hitting higher. So very good neutral zoned kind of trading activity. A little bit difficult to want to go long in that environment, so you have to be careful, especially with overhead resistance like we've been seeing. And the trend Q, a little bit of a different story, has been bullish all day long. So there's a nice divergence now between the two. And the VIX, oftentimes a tiebreaker. After a run-up, which is sort of smacking in the face of what the trend readings were, nice bleed out. So this is a little bit more bullish environment than a bearish one, since two of those broad market internals are holding up and confirming each other, but there is a gap fill. So let's zoom out to a 15-minute chart to see this. Very, very nice. The broad markets have retraced more than this gap fill, and looking to see if we can make a lower swing high now in the VIX, along with a higher swing low in the broad markets themselves, and see if we can take out this overhead resistance that exists here and on the S&P 500 with the 200 MA. Good stuff. So there's a lot of technical information to take apart here, and very, very powerful to be able to read that. So let's go out one more time frame. If we closed right now on a daily chart, this would be just basically a doji-esque bar, very narrow range candle, and it's almost not that important whether it's an open candle or a red one right through here. I just wouldn't have moved much. So I'm looking for at least a close into the 109 mark to solidify this nice higher swing low that we have. If we don't, then that would be the beginning of a low base consolidation in this time frame, and a higher low base from this time frame. So again, it all makes sense, but I'm really ultimately looking for a move back up to mark the next swing high we get. So good stuff, everybody. Hope your trading day is going well so far, and look forward to D7's video at the close.